Welcome, accounting boffins. Remember, we're dealing with inventory systems. A quick recap, the two systems that we are dealing with will be one, your periodic inventory system, right? And you've now noticed that it has certain characteristics. And what are those characteristics? One, the periodic system deals with a purchases account, where everything regarding the goods that we are buying goes into my purchases account, right? Number two, we also dealt with the perpetual inventory system. And when we dealt with the perpetual inventory system, remember, we're dealing with a trading stock account, where everything regarding the goods that we are buying gets recorded in my trading stock account. Okay, now let's put into practice what we have discussed so far. Let's do an actual example, right? Here goes. Required, use the information to calculate the cost of sales on the last day of the accounting period, the 29th of February 2020. Right. Now, in our previous segment, we had an elaborate discussion on the calculation of cost of sales, right? Let us just recap. Let's look at the format. Remember I said this format is something that you must learn. What goes into the calculation of my cost of sales? Number one, opening stock, right? To it, you add your purchases. Remember, it is your net purchases. In other words, take your purchases figure, less your creditors' allowances, goods that were returned, less your donations, if applicable, less your drawings of stock, if applicable. So obviously, those would only be applicable if they have taken place. That will then give you your net purchases. What do? We now add the expenses on purchases, like what? Customs duties, import duties, any expense that will lead to an increase in the cost of my goods. So wherever I've purchased the goods, any cost that would involve me bringing that good to my business would increase the cost price of that good. Okay, add all of that together, less your closing stock will give you cost of sales. What's the lookout here? The lookout is carriage on sales. If it is given, it is not applicable to my calculation of my cost of sales and will therefore not be used. Rather, it's a normal operating expense that will go to my profit and loss account. Okay. So there we go. We've got our stock at the beginning of the year. We've got our purchases. We've got carriage on purchases. We've got customs duties. There's my opening stock. There's my purchases. There's my carriage on purchases, customs duties, and obviously my closing stock. Look at my calculation. You start off with your opening stock, right? Let me just redo that. Here we go. Here's my opening stock. I add my purchases component to it. I add my carriage on purchases to it. I add my customs duties to it. All of these components, when we add them together, it gives us a figure which we call merchandise available for resale. In other words, what you see here is your goods available for resale is the 535,000. How did we get that? We took the 60 plus the 450, which is 510, plus the 20, which is 530, plus the 5, which will give me 535,000. Okay? You now subtract. What do you subtract? You subtract your closing stock. Because remember, that's the stock that's still on our shelves. We didn't sell that goods. Those goods are still available. And remember what we said early on? Your closing stock of this year will become your opening stock of the following calculation. Next year's opening stock will now be 35,000. But for now, it's this year's closing stock, 535,000 minus your 35,000 will give you your cost of sales figure, as you can clearly see, is 500,000 Rand. So what do you remember in this calculation? You add that, plus that, plus that, plus that to be equal to your merchandise available for resale. You only subtract your cost of sales, which is at the end, you only subtract your closing stock at the end of the year, which will then give you your cost of sales. Now remember something else. This purchases figure here, if there are calculations that you have to show, then it is imperative that you draw up a small calculation for yourself and you show it as part of your answer. So, if there was creditors' allowances or donations or drawings of stock, all of that would be shown in your bracket, right? So, as an examination technique, always show your calculations, because perchance if you make an error, you can get part marks for a final answer. Okay. We now come to a business and we are told the following information was taken from the accounting records of a business. Calculate the unknown amounts and percentages on the 29th of February 2019. Okay, let's see what we have here. We have opening stock, purchases is an unknown, carriage on purchases is given, your goods available for sales is given, your closing stock is given, right? Obviously your cost of sales is another required figure, your gross profit is given, your sales is given, your gross profit on cost of sales as a percentage is an unknown, and your gross profit on turnover is a given figure. So obviously, based on the information that you have, you now have to calculate a missing figure. Now remember, that initial calculation for cost of sales, it is of utmost importance that you know that component or you know the layout, as you will see just now. So, we start off by saying, let's take the 198,000, right, which is my goods available for resale. There's it, right? So, we take the 198,000 minus the carriage on purchases of 8,000 minus the 8,000, right? As you can see, I'm working here with the carriage on purchases as the first calculation. So I'm working with a reverse operation. I'm taking my 198,000 minus the 8,000, right? And then I say minus the opening stock of 60,000. So there I'm bringing in my opening stock figure, which is the 60,000 minus the 60,000, right? And that will be equal to 130,000. So my missing figure here will be my purchases figure of 130,000. In other words, if you now look at it here, you can clearly see, and let me show you this operation so that you know what I'm talking about. Watch, 60,000 plus the 130,000 plus the 8,000 will give me 198,000. Let's check that on the calculator so we know absolutely, we know what we are doing is correct. So we go 60,000, right, plus 130,000 plus 8,000 will give me 198,000. And that's the figure that was given to me. So in this way, I calculated my missing component, and my missing component there was my purchases figure, which was denoted as A. Right, okay. Moving on, the next calculation, we've done this one here, is I have to now calculate, let's see, what was it? I needed the cost of sales figure, right? So this was my calculation now. So obviously, based on our previous format, what do we remember? Your merchandise available for resale, which is the goods available for resale, 198,000, minus the closing stock figure of 55,000 Rand. Remember, the stock that is unsold at the end of the year amounts to 55,000 Rand. So, taking my calculator once again, I've got my 198,000 minus the 55,000, and that will give me a figure of 143,000 Rand. So in other words, you can see here, 143,000 Rand will be my cost of sales. And if I now look at it, there's my calculation, 198,000 minus the 55,000 to give me 143,000 Rand. Watch, in my calculation, I can clearly see their closing stock was subtracted. And that's the operation that you must take into consideration, that you subtract your closing stock at the end of your financial year. Okay. Now moving forward, we are asked to also calculate C. Now what is C? C says gross profit on cost of sales. Remember, we want to calculate a percentage here. Therefore, what are we going to be doing now? Right. The indicator says gross profit on cost of sales. Let's identify. What is my gross profit? My gross profit is 71,500. Okay? So my gross profit is 71,500. They want it expressed as a percentage of cost of sales. And your cost of sales is something that you have calculated to be 143,000 Rand. Okay, so now watch my calculation. I start off by saying, take your gross profit over your cost of sales and express it as a percentage. Right, let's identify. Gross profit, 71,500. Therefore, 71,500 over my cost of sales. Let's identify. Cost of sales, 143,000. Clearly you can see over 143,000 multiplied as a percentage. Let's do that on our calculators. So what do? It is 71,500 times 100 divided by 143,000. This will now give me my markup percentage of 50%. Right? So, if I look at this here now, I can see that I took my, there we go, I took my cost of sales over I took my gross profit over my cost of sales times 100 over 1, and there I got my answer of 50%. So in other words, this business is marking up its goods by 50% on cost. In other words, remember the table that you always draw up? I've always asked you to draw up this table. What is this table here? It will look like the following. Cost price is equal to 100. Your markup is equal to 50. Therefore, your selling price is equal to 150. Okay. Now, if we look at this information here, you can see that your gross profit percentage on turnover is given to you as 33%, right? So, depending on what the question asks for, you must be able to use financial indicators to also calculate certain figures. And that is why it's important to be, one, calculate the gross profit. Number two, see whether it ties in with your financial indicator. Here I'm referring to the gross profit percentage as a cost of sales and your gross profit on turnover as well. Okay, let us now summarize what we have done in this very important segment on inventories. One, periodic inventory, you have to do a calculation for your cost of sales. And what is that calculation? It is your opening stock plus your net purchases, plus you add all your expenses on your purchases. That will then give you your merchandise available for resale. You subtract your closing stock, and that then gives you your cost of sales figure. Once you've determined your cost of sales figure, it will be your sales less your cost of sales to give you your gross profit. Also remember that in this section as well, you must be able to use your financial indicators. The two that we dealt with here were your gross profit on cost of sales and your gross profit on turnover. You must be able to calculate them, and you must be able to use them to find missing figures. That's it from today's lesson, accounting boffins out there. From me, Ashraf, and the team, like we always say, aim for the moon. Perchance if you don't get there, you definitely will be an accounting shining star. Until the next time, be good.